every option has contract specifications. Options are standardized, and there are 4 key specifications that can identify any option that you're looking at. Let's break it down. So here I have an example option. It's the XYZ October 22nd, 2021, $75 call. And I've also put in parentheses because, of course, for every call, there's also a put. Now, let's break down what we're looking at. Here at the front of the option, we have this symbol XYZ. This is what we call the underlying. And if you hear us talk about the word underlying in this series, we're referencing the stock or ETF or product that the option is tied to. What about this date, October 22nd, 2021? Well, this is the option's expiration date. And what's important about this date, it's the last day you can trade or exercise the option before it expires. Now, the third thing in this option is this number, $75, and this is the option's strike price. This is the price in the case of a call option. The buyer of the option can exercise the right to buy shares at $75. If it was a put option, it's the price that the buyer of the put option has the right to sell shares at. And so in every option, there's going to be a strike price. Now at the end, as we've alluded to, there's 2 types of options, calls and puts. And this is what we call the option type. So those are the 4 main specifications that you'll see across every option. Now there's 2 other specifications I want to bring up very quickly. The first is what we call the contract multiplier. And what's important about any option you look at is a standard option controls or gives you the right to buy or sell 100 shares of the underlying, in this case, XYZ. So, and I'm going to put in parentheses typically here, because there are some options that as the result of a corporate action like a stock split or a merger and acquisition, their options might be a little funky and they might not control 100 shares. But in this series, when we talk about options, we're generally talking about standardized options that control 100 shares. And the last thing I want to point out is exercise style. Now, we're not talking about a workout here. We're talking about how and when you can exercise your right under the contract. And we call this 2 different terms, American and European style options. Now, this has nothing to do with where the options are traded. They're just a way to label the type of option you're trading. So for example, if this option, the XYZ October 22nd 75 call, was an American style option, that would mean we can choose to exercise it if we were the buyer of that option, to exercise it on or before October 22nd. If this was a European style option, we would only be able to choose to exercise that option at expiration, which is October 22nd. So there's a key difference there. And it's always important to know, depending on which underlying you're trading, it might be a European style option or an American style option. But the takeaway here, guys, is that every option has 4 main specifications: the underlying, the expiration date, the strike price, and the type of option, a call or a put.